Listen, if there's one thing I've learned working in commercial finance, it's that every successful business has two things in common. It's simply opportunity and access. For opportunity, it's everywhere, but now access, that's where most business owners get stuck. I've seen it happen thousands of times. A business is doing great work, they have loyal customers, a strong product, and an even more solid team. But when it comes time to grow, expand, or even just survive that slow season, finding the right type of financing can feel impossible. That's why we built Rock Financial, to create real access, to connect business owners, partners, and professionals through one transparent system that actually gets people the funding that they need to move forward. We've helped fund over $2 billion for small, medium-sized businesses across the country. We work directly with business owners and through a network of advisors, affiliates, and partners, with everyone aligned around the same one simple mission: helping entrepreneurs win. Our headquarters is on Long Island in New York, but our reach is national. We've built relationships with hundreds of private lenders and investors, as well as financial institutions, so that we can offer options that most banks just simply can't. And what makes us different? Well, it's three things: speed, transparency, and experience. When you work with Rock, you always know where your business stands. You'll know who's handling it, what the next step is, and how close you are to actually receiving the funding. There's no guessing and certainly no disappearing acts. See, here's the truth. Most business owners get denied, but not because they're unqualified, but because they're talking to the wrong bank or asking for the wrong product. A trucking company needs a different type of funding solution than a retail shop. A contractor's timeline is certainly not the same as a doctor's office. And banks, they rarely account for that type of stuff. That's where we step in. We match the right businesses with the right product at the right time. Whether you're a business owner looking for funding or a professional guiding clients, your success depends on exactly what these products do and why one is better than another in specific situations. If you're looking for funding to grow a business, a term loan might be one of your best options. However, it's important to understand how it works before you even apply. A term loan is a lump sum of money that a business borrows and pays back over a fixed period of time. These loans can last anywhere from 12 months to 10 years, depending on the lender and how you are using the funding. Once you're approved, you receive the full loan amount up front. You'll then repay it in scheduled installments that include both principal and interest. Term loans are commonly used for things like purchasing equipment, expansion, hiring staff, renovations, or even refinancing existing debt. One major benefit of a term loan is its predictability. Fixed payments make it much easier for you to budget and ultimately plan ahead in your business. They often come with a lower interest rate compared to other short-term financing options, especially for businesses with strong credit. Term loans can help you invest in long-term growth without draining your cash flow all at once. However, term loans aren't perfect, and approvals can be harder to obtain unless you have a strong credit or financial history. You're also committing to long-term debt, which means that payments have to be made even during your slow months. And if interest rates are high, borrowing can become more expensive over time. A term loan can be a powerful tool when it's used wisely. The key is knowing your number and choosing a loan that fits your business's needs, not just today, but also for the future. If you need flexible access to cash without taking out a full loan, a line of credit could be the solution for you. A line of credit gives your business access to a set amount of funds that you can draw from as needed. Instead of receiving all the money at once, you use what you need and only pay interest on what you've already used. Once you're approved, you're given a credit limit and you can draw funds, repay them, and then reuse the credit again, similar to a credit card. Payments are typically monthly and interest is only charged on your outstanding balance. The biggest benefit of a line of credit is simply flexibility. It's ideal for managing cash flow, covering unexpected expenses, or handling seasonal slowdown. Because you only pay interest on what you use, it can be a much more cost-effective option than a traditional loan. It also gives your business peace of mind that the funds are there when you need them. On the downside, some lenders may charge maintenance or draw fees even if you don't use the funds all that often. And without careful management, it can be easy to rely on your credit too frequently. A line of credit can be a powerful financial tool when it's used responsibly to help your business stay flexible, prepared, and ultimately in control. Waiting on customer payments can certainly slow down your cash flow, but accounts receivable financing can help you get paid much sooner. Accounts receivable financing allows your business to borrow against unpaid customer invoices. So instead of waiting 30, 60, or even 90 days to get paid, you can access that cash almost immediately. Once you submit an invoice to a lender, they then advance you a percentage of that invoice's value, often up to 80 or 90%. When your customer pays the invoice, you'll receive the remaining balance minus any lender fees. The biggest benefit is the improved cash flow. It can help you cover payroll, purchase new inventory, or even cover operational expenses while you're waiting to get paid. Approval is often based on the creditworthiness of your customers, not just your business, which can make it much easier to qualify. It also allows you to grow without taking on traditional debt. And it only works if you have strong, reliable invoices from credit-worthy customers. Accounts receivable financing can be a smart solution for businesses that rely on invoicing to turn unpaid invoices into working capital when they need it most. If you're looking for the longest term, affordable financing, an SBA loan could be one of the best options for your business. An SBA loan is a business loan partially guaranteed by the Small Business Administration. While the SBA doesn't lend money directly, it works with approved lenders to reduce risk, making it much easier for small businesses to qualify. After applying through an SBA-approved lender, funds can be used for things like working capital, equipment, real estate, or even business acquisition. SBA loans typically offer longer repayment terms and lower interest rates than many other forms of financing. One of the biggest advantages of SBA loans is simply affordability. Lower rates and longer terms mean lower monthly payments. They're ideal for long-term investments and ultimately business growth. SBA loans are also known for their stability, making them a strong option for established businesses that are planning ahead. On the downside, SBA loans often have a long approval process, sometimes taking months. They typically require strong credit, detailed financials, collateral, and profitability. There are also strict guidelines on how the funds can be used. SBA loans can be a powerful tool for businesses ready for long-term growth, but patience and preparation are your key to success. Need new equipment to grow your business but don't want to spend all your cash up front? Equipment financing could be the solution. Equipment financing allows your business to purchase or lease equipment, think machinery, vehicles, technology, while spreading the cost over time instead of paying for it all at once. Once you're approved, the lender pays for the equipment and you make fixed monthly payments over a set term. In most cases, the equipment itself acts as the collateral, which can preserve your cash flow. You get the equipment you need without draining your working capital. Payments are predictable, making your budgeting much easier. Equipment financing can also offer potential tax advantages, since interest or depreciation may be deductible depending on your particular business's situation. On the downside, you're still taking on a lease or debt obligation. Interest and fees can increase the overall cost compared to paying your cash up front. However, equipment financing can be a smart way to invest in growth. Just be sure that the equipment adds long-term value to your business. So, what makes Rock Financial different? Transparency. You always know where your business stands. Access. Every type of funding under one roof. You don't need to chase down multiple lenders. Experience. We've seen it all, and we know how to guide clients through complex deals, unique industries, and tight timelines. That combination lets us serve everyone, from startups to multi-million-dollar companies and every business in between. Depending on who you are, your connection with Rock might look a little different. However, the mission mission stays the same. Business owners, we help you find funding that fits your goals. Partners and affiliates, we give you the tools and products to serve your clients confidently. Business professionals, we help you provide real access and real results for the businesses that you serve. We're all a part of the same mission, helping businesses move forward. We're extremely proud of what we've built at Rock. However, we're even more proud of who we serve. Every transaction, every client, and every partnership means another business owner keeps building their dream. So whether you're seeking funding, exploring a partnership, or helping clients grow, our team is ready to guide you. Schedule a call, connect with us on social media, and subscribe here for more insights into how we help everyday businesses grow. I'm Tony Cimino, and on behalf of the entire Rock Financial team, thanks for watching.